Welcome to Dental All Stars. I'm Eric Vickery, lead mastery coach at All Star Dental Academy and president of Vickery Coaching. I am super pumped to interview our guest today, dental CPA Art Wiederman. Art's been a CPA serving the dental profession since 1984. He started his career working with dentists through the Pride Institute of Management, running their financial services division. That's pretty impressive, Art. I like that. Let's see, which ultimately became his CPA firm. Art merged his firm and is now part of the Eide Bailly, which serves over 700 dentists in the Western United States. So you're a busy guy, huh?
Yeah, sometimes too busy, but I am a busy guy.
Yeah. So let's see. Art is a frequent lecturer at local, state, and national meetings on the subject of financial issues for dentists. He has a weekly podcast with thousands of listeners that he publishes each week called The Art of Dental Finance and Management with Art Wiederman CPA. Art helps his clients in tax, accounting, transition, and long-term planning to help them meet their personal and business financial goals. Art and his wife of 36 years, Lynn, live in Orange County, California. All right, beautiful, sunny Orange County. Art has a passion for golf and loves to go fly fishing when he gets the chance. So welcome, Art. I've been so interested and passionate about helping dentists with, triple P and the employee tax credit, retention tax credit. And I know those are complicated topics. And I'm so glad you agreed to come on and just share your knowledge with us. So let's jump right in. How's that sound?
Great, Eric. And thank you for the honor and privilege of being on your podcast and helping you with what you do.
Oh, yeah. The Dental All Stars podcast is full of dentists and I think team members who are trying to figure and navigate this environment that we're in now. We're in it's the new normal, right? And
Yeah.
I've been calling it triple P, but Paycheck Protection Program and the ERTC, the Employee Retention Tax Credit. Those are really complicated topics. And so I want to jump right in and just let's help those that are listening out with just navigating some of this and figure out how to make it work for them. How's that sound?
Sure. Sounds great.
All right. So I want to start with just a random question I got from a client where his translation of it wasn't quite clear, but after talking with you, it makes sense to me now. He said to me, yeah, I'm actually going to get more money on my triple P 2.0 than I did on my first loan because my bank told me I now qualify for $100,000 of my own pay divided by 12 and get the $8,330 a month, whatever it is. And I was like, why are they just going to magically give you that much money? So his explanation or translation of it wasn't quite clear. So why don't you give our listeners what he's referring to and why he does qualify for more money this time around?
Sure. So there have been two rounds of the Paycheck Protection Program. First round came from the CARES Act, which was passed March 27th of last year. And now we have round two that became part of the law December 27th. And the way you calculate the amount of money is it's basically depends on the type of entity that you have. Now, your client, I guess, is a sole proprietor or an independent contractor. So they file a Schedule C. So they don't get a paycheck. They don't get a W-2. So they file a Schedule C and they have net profit. So what the government was finding is that a lot of sole proprietors, independent contractors, didn't have a large bottom line because there was a pandemic last year, or maybe they were starting. And a lot of the small business owners who were independent contractors or Schedule C business owners, they weren't getting as much money as they could have. So they changed the rules a couple of weeks ago to where you can now use your gross receipts to do the calculations. And everybody who applies for either a PPP-1 or a PPP-2 loan is limited to using $100,000 of net income. So Eric, if you were a dentist and you had a dental practice and you were an S corporation, you would be limited to $100,000 of your W-2. And then you get to take 2.5 times your average monthly payroll. So that would be a maximum of $20,833. Well, it's the same thing now, the Schedule C. They're going to be limited to a maximum of $100,000 divided by 12, which is 8333 times 2.5 months. And that's 20,833. And that's the maximum they can get. So now more Schedule C filers are going to be able to get more money. The problem is if you've already filed using net profit, at the moment, they're not letting you go back and change it, with a lot of folks are upset about. But
Yeah.
I mean, these rules are, I mean, if you go onto treasury.gov, there's dozens and dozens and dozens of multiple page sets of rules on these, what they've done in the past.
So to summarize for the listeners, we went from net pay to now being able to use gross pay, which almost everybody's going to be over the $100,000 mark on gross pay. So you're going to hit your ceiling, would you say?
And yes, and you can use either 2019 or 2020. Got it. Most people are going to have higher income in 2019 because we had a pandemic in 2020, and dental offices, for the most part, shut down for 2 to 3 months.
That's right. Exactly. So that brings us into the next question. I can hear people thinking, well, my bank says I got to apply the same way I applied the first time. Otherwise, it's going to be all this paperwork and it's complicated and all these sorts of things, what you were alluding to. Any suggestions on how to navigate that if you're trying to increase what you're going to get back?
So you mean for the PP2?
Yeah.
PPP2.
Yeah.
Okay. So we recommend that you use the same bank, because when most dentists applied, Eric, for the PPP1 loan, they were able to use their 2019 tax returns. You can use your 2019 tax returns for applying for the PPP2. So it's theoretically should be a lot easier. I will tell you that there's been a lot of talk in the media about the difficulties that banks have had in pulling out PPP2, asking for more information than they need. If you're having real trouble with your lender and they're not being cooperative, go to another bank. It's
a smaller
not
bank.
Big of a deal. A smaller bank is fine.
Yeah.
The government has made it easier for the smaller community banks to get money, because they were shut out in a lot of cases by the bigger banks in round one. But yeah, you want to apply. In order to qualify for the PPP2 loan, what you have to show is a minimum of a 25% reduction in your gross receipts for any calendar quarter in 2020 as compared to 2019. Now, most of your doctors that are going to be listening on this podcast are going to be looking at the second quarter of 2020, because most dental offices shut down middle of March and stayed shut down, with the exception of, in many cases, emergency procedures, until around May 15th to June 15th, depending on the state that you were in. So yes, you have to have that. Less than 300 employees. If you have any group practices, DSOs listening to your podcast, that they have that. And they had to apply for a PPP round 2. They had to have applied for PPP round 1, and they had to have used up all the funds for the intended uses. And as a general rule, if they do that, they can apply, and they're probably going to get a pretty similar amount of money for PPP2 as they got for PPP.
So I heard you say something. They had to have applied for triple P1. What if I have a client who was like, I'm not sure I want to get in this. What if it's not forgivable? And they had all those doubts. And then by the time they said, all right, I'm going to go get it, the money was gone, and they never went and got triple P 1.0. Now they want to apply for triple P 2.0. What can they do?
They can apply. There are 2 applications. One is for first-time applicants, and you can apply like the first-time applicant. And the other one, if you've applied for PPP 1, you would apply for the second round. So there's 2 separate applications on the website, and you're going to go through your bank's portal. And most of the banks have a pretty good system that you upload your information, and a lot of times they have it. So it really depends on the bank or financial institution you're dealing with.
Sure. Now, I have a client who does not qualify because they opened back up in April. They were just in an area where it just wasn't a problem. So they were closed March. I'm sorry. They were open in May. They were closed March and April. If I take those 2 months over a 3-month span, they qualify, but it's part of quarter one in March and part of quarter two in April. There's no way around that. It's either quarter one or quarter two, right?
Unfortunately, Eric, it is. And I will tell you that we have a very close relationship with the American Dental Association. I work very closely with one of their congressional lobbyists, a young lady by the name of Megan Mortimer. She and I have been bound at the hip. She's been on my podcast. She's been on my webinars. She is telling me that these have been issues. They actually are going to Treasury asking if you could use any 3-month period.
Yeah.
That is not allowed right now. So right now it is calendar quarter. And again, it's probably going to be quarter two.
Yeah.
And if they don't meet the 25%, then they don't qualify for the second round.
But it also means they were doing pretty good, and the Triple P 1.0 probably was enough. So for those paying attention, you would run your profit and loss report through QuickBooks, and you would just compare quarter one 2019 to quarter two 2020 and show that there was a loss in your collections, your revenues of at least 25% or more, correct?
Right. And when you file the application, Eric, there's two groups. If you're going to be applying for a loan that is less than $150,000, you do not have to show the amount of your reduction in collections. If your PPP loan is over $150,000, then I'm sorry, let me go back.
Yeah.
You don't have to show your collection drop on the application, but you will be required to show it when you file for the forgiveness part. If your loan is over $150,000, then you have to show it on the application that you're going to submit through your bank at the time of submission.
Got it. That makes sense. Okay. Thank you for clarifying that.
Sure.
Well, you're talking about forgiveness. So rules for filing for forgiveness on Triple P loan round one, which we're hitting that 10-month, it's going to be coming up this summer for most people. And to clarify, they have to apply for forgiveness within 10 months of the end of the money they used, or where does that 10-month window show up?
Okay, so basically there's 3 steps that doctors should do on their calendars.
Okay.
Number 1, figure out the day that your PPP round 1 money hits your bank account.
The funding day.
Yeah. So let's say I just did a webinar to over 300 dentists on this, and I created an example.
Yeah.
So let's say Dr. Vickery got his PPP loan on May 7th of 2020.
Okay.
I'm going off of memory, so if I miss the days by a day or two, bear with me. You have 20. You can use a covered period of anywhere between 8 to 24 weeks, and we strongly urge all of our doctors to use 24
weeks. Yeah.
So Dr. Vickery's 24-week period starts on May 7th and ends on October 22nd of 2020.
Okay.
That's 24 weeks to the day from May 7th. Then you have 10 months from that day, which is August 22nd, 2021, to file for forgiveness. Now, I would not recommend that you file on August 22nd.
Yeah, don't be waiting till the end here.
Don't wait till the end.
Yeah, all you crunch timers.
Wait till the end. And by that time, if you don't file for forgiveness, your loan turns into a loan. They will send you a bill, and depending on when you got your loan, you will either have to pay it off over 2 years or 5 years at a 1% interest rate.
Got it.
So
Got it. Makes
most
sense.
of our doctors, we're getting going with this.
And it seems to me the banks are prompting you when it's time to do this and pay attention to what they're saying, right?
Yeah, and again, if a bank tells you you have to file for forgiveness, you don't have to file when they tell you to file. The banks don't get paid a fee. They get a fee from the SBA for all this work. So a lot of them want to generate this revenue, get it going. They also want to spread out the work. They don't want to get thousands of forgiveness applications in at the same time, right at the end. They don't want to do that. So, if your bank tells you something that doesn't sound right, talk to your CPA, someone who understands how this works. Again, there's a lot of misinformation out there. I can tell you. Yeah.
And we're fast approaching the deadline for applying for Triple P 2.0, right?
Right. So the deadline for applying for Triple P 2.0 is March 31st. So here's what's going on with that. Number one, a lot of banks have shut down taking applications because by the time you put your stuff in, maybe you don't have all of it in, you have to get some more. They don't have enough time to get it packaged and sent up to the SBA by March 31st. So many banks have shut down. The good news is that there is a bill that was introduced in the House of Representatives last week that will extend for 60 days the time period to apply for a PPP2 loan to May 31st. And I spoke with Megan from the ADA, who's got her finger on the pulse of what Treasury is doing. And I would say, never guarantee anything. Okay. Maybe Tom Brady could guarantee a Super Bowl win, but other than that, never guarantee anything. I would say it's more likely than not that this will become law quickly because number one, you've got the problem of what we were talking about earlier, Eric, which is the Schedule C filers. A lot of banks either have not or actually refuse to change their software systems to conform to accepting gross receipts. So that's one problem. And they won't have the time to do that. So Schedule C filers who heard the new gross income rules, who want to apply, a lot of them can't. And second of all, there's last I heard about a week to 10 days ago, there's about $100 billion left, give or take. It goes down every day. So there's money left, and the government wants you to have it, that they want to help the small businesses. So I would say, not guaranteed, I would say if you've got folks listening to this podcast, I would jump on this that day, the next day, as soon as you can. But watch the newspapers because we think that they will go ahead and extend it. They're going to extend it. They're talking about through May 31st, and then they would give the banks an additional 30 days after that to get all of the loans packaged up and in.
Got it.
You'd have to have your applications in. That's what the proposal is. Again, until it's law, we can't really say it's law.
Yeah, that's great information. Thank you so much for clarifying that.
Sure.
So, my guess is a lot of my clients, coaching clients, have already applied or in the process of applying, and therefore missed out on the whole net to gross pay if they had, said they made less than $100,000 on Triple P 1.0. And so if that's the case, they're missing out on, $3,000 or something, or it's not going to be that much probably, right?
No, and most dentists operate as either S corporations, single member LLCs, partnerships, multiple member LLCs. So it's a minority of dental practices that operate Schedule Cs. What it might hurt is the sole proprietor or the doctor that's working in 3 or 4 different offices and as an independent contractor.
Yep. Gotcha. Okay. Let's flip the script. Now the complicated topic, right? If that wasn't complicated, this topic is complicated. And I've had doctors asking me questions about this, and I'm just racking my brain trying to figure this out. This employee retention tax credit, which basically is like, I kept my employees, I was paying them last year through the pandemic, and now the government wants to bless you and give you some of that money back because you didn't have them go on unemployment. So help us understand it from your perspective, how it relates, and do I qualify?
All right, take a deep breath, Eric.
My fingers are ready to take some notes.
Okay. So just a little background, the employee retention tax credit came into the law the same day as the PPP came into the law, March 27th. It was part of the CARES Act. The problem is that if you took out a PPP loan, you were not allowed to take advantage of the ERTC. So to save us some time, we'll call Paycheck Protection Program PPP and Employee Retention Tax Credit ERTC.
Yes.
Okay. So I had one client who looked at ERTC, and I didn't even learn the rules. And then Megan calls me around the 15th of December and says, Art, we got legislation that's going to be signed by the president, we believe, that's passed by Congress, that is going to allow small business owners retroactive back to March 12th of 2020, that if they applied for a PPP1 loan, they can now qualify for the ERTC.
So double dipping.
Well, there's double, there's triple, there's quadruple. I mean, the government, it's give out money day, I'm telling you.
Yeah.
So let's just talk about, first of all, now on December 27th, the president signed a $900 billion stimulus program. That was the one where they gave out $600 stimulus checks.
Yeah.
And what that did is that took away they did a couple of things. Number one, it took away the ruling that you couldn't use the ERTC if you had a PPP loan. So now you can. And it's retroactive back to March of 2020. So I quickly went in and figured out how this works. So any doctor, every doctor should be looking at this. First of all, how much is the credit? The credit is basically 50% of the qualifying wages that you pay your employees during any period that you are eligible for this credit. So the maximum amount you take into account is $10,000. So the maximum credit for 2020 is 50% of that, or $5,000. So what the maximum amount you get if you have a dental office that has 10 employees, the maximum credit that you can get for 2020 is is $5,000 per employee, so it's $50,000.
Yeah.
Now you are not allowed to deduct. Let's say you get a $50,000 ERTC credit.
Let me clarify something. $10,000 annual max, not quarterly max.
No, annual.
Okay, got it.
We will have a quarterly max when we get to the new rules for 2021.
Yeah, I just want to make sure there's a difference there. Yeah, there is a difference between the 2 years. Yeah, okay, gotcha.
So for 2020, it's $5,000 per employee. So the way this works is, so that's the maximum. You're also not allowed to deduct the wage expense that this credit is based on, because that's double dipping. So that is why that anybody who might be eligible for this ERTC, and we're now past the March 15th S corporation and partnership deadline, you should have extended your corporate or partnership and then ultimately your personal tax return, because we're not going to know what this number is until we do these calculations. We are doing these calculations at iDaily for hundreds and hundreds of dentists. We'll get to that later.
Yeah.
Okay, so how do you qualify?
Yeah, so I want to just back up a second.
Sure,
you lost me at the beginning of that when you said you can't deduct the wage expense, that is, and you said it's double dipping. What was that, what you said?
So if I get a $50,000 credit for 2020, that is based on wages that I paid employees. So they're not going to give you a tax credit on that wages for that employee A of $5,000 and let you take a tax deduction for it.
Got it. It's not a write-off on your profit and loss.
Right. So you have to add it back to your income. So if you're in, say, a 24% tax bracket for federal, then you're going to get 76% of the $50,000 as a net, and you have to do it in 2020. We came out with rules, so you have to add that back. That's why everybody should be extending their,
because they need to figure out if it's worth doing, right?
Well, they need to figure out if it's worth doing, and they need to figure out what the number is.
Yeah.
Because not every employee is going to be paid $10,000. So yeah.
Let me ask you a question. It's $10,000 in what period of time?
So, all right. So let's go into the requirements, and this will become really clear.
Okay.
There are two ways that you can be eligible for this credit. The first way is going to be the most common way. You know, we were talking about, Eric, a 25% reduction in your gross receipts for PPP2.
Yeah.
Now what we need to do is to show a reduction in gross receipts for any calendar quarter, again, calendar, of more than 50% in 2020. Now, that is probably only going to be quarter two. Now, we are finding that maybe not surprisingly, half or more of our doctors had that reduction because they either shut down completely or they were only doing emergencies. And if you think about it, they shut down March 16, 17, 18. So we go right to quarter two, April 1, they were shut down all of April, many of them all of May.
Yeah.
And we're finding that we're finding a 50%. So if you have
Yeah.
a 50% reduction in collections, not production,
Yep.
collections, I mean, I would be shocked if there's anybody who's got one in quarter one, quarter three, quarter four, but it could be. But for
Makes sense.
99.9%, it'd be quarter two.
I've
So
seen clients that were closed 2 out of 3 months, so they had a 66% loss.
exactly.
Yeah.
So basically, it's a 50% reduction. And the way it works is that if you qualify for quarter two, you automatically qualify for quarter three, because then you look at the next quarter, quarter three. And if you had a greater than 20% reduction for quarter three versus quarter three of 19, then you get to qualify for quarter four. Most doctors, as you know, Eric, as a coach, they had all the pent up demand. They opened up in June. They came roaring back, even with the social distancing. So we're seeing some. I had one doctor who was down by 19.82%. I said, we need to find $700 because it opens up quarter four. So for most of the doctors who are going to do this, Eric, it's going to be quarter two and quarter three. So let's think about it. Let's say an average dental employee, and again, we could be talking in a rural area versus a big city. Let's just say an average dental employee makes maybe $40,000 a year, $50,000 a year. Well, $40,000 a year is $10,000 a quarter. So if I have $10,000 a quarter and I have 2 quarters to play with, that means that a lot of my employees, if I qualify for quarter two and quarter three, are going to have paid at least $10,000. And these are W-2 employees. Now you get to not only count the wages that were paid, but you also get to count any group health insurance premiums that were paid by the practice on behalf of those employees, calculating all of this. So if I have a 50% reduction, then what I do is I go in and I look at the second and third quarters. I make a list of all my employees and I say, how much did we pay them? Okay. And we have that amount. And this is for 2020. The second way that you can qualify for the credit.
So if I don't have a 50% loss, can I still qualify?
The only way you can qualify is the second way to qualify, which is if your dental practice was shut down due to a government order. Now, Congress, the Treasury came out. We were waiting for guidance on all of these rules. On March 1st, they issued IRS notice 2021-20. If your listeners are having insomnia issues, feel free to start reading. 103 pages. I've read it 3 times, cover to cover. Okay? So basically, they came up with 20 pages of rules of what does a government order mean. Now, when you have your dentists that are listening to this podcast, they're going to say, yeah, the government shut me down. CDC said I should shut down. ADA said I should shut down.
Yeah.
Well, that doesn't count. You have to have a government order that comes from the federal government, which to my knowledge, there is not one. Any state, and there are states that did order dentists to shut down. Now, this doesn't have to be in total. The shutdown can be in whole or in part. So what most orders that I've seen from states and counties and cities have said is that dentistry is considered an essential service or an essential business, but only for emergency procedures. Well, Eric, you've been a coach for a couple of days. What percentage of a dentist's revenues comes from emergency procedures?
At the most 10%.
Right. And the rules say that if the portion of the government order that is applying to your county, city, state, if the portion of your order is a partial shutdown, as long as at least 10% of your business was affected. So you have, I've seen some places in Northern California had some government orders. I have not been able to find one for Los Angeles or Orange County. That doesn't mean that somebody isn't going to send me something, but I've read those orders. But there are many states that did order dental offices not only to shut down, but just for emergencies, but to shut down, period.
So you're saying California didn't have a mandated shutdown?
They had they had an emergency, they had a mandated shutdown, but there was nothing in Governor Gavin Newsom's order that I could find, nor could I find in the California. He basically punted the whole issue to the California Department of Public Health. I read their letters and their orders. I could not find anything. And again, I live in the dental profession here in California every single day of my life. I would have heard somebody, or somebody would have sent something, and I just never got it. But there are cities, counties, and states who have done that. Now, remember, Eric, we talked about that for the 50% rule, they qualify for Q2, Q3.
Mm-hmm.
For this government order, it's not that big of a deal in many cases because, number one, you only qualify for the period of time that the order is in place. And many of these orders were in place for a month, a half. And also remember that a lot of doctors furloughed their employees. Because if you remember back then, Eric, the government was paying $600 a week in unemployment benefits. So we had lots of dental employees who were saying, I don't want you to pay me. I'm going to make more money on unemployment. In California, it was $1,050 a week. So if you stayed home, you were making the equivalent of over $50,000 a year.
Yeah.
So a lot of doctors didn't pay during the time they were shut down. So the credit amount wouldn't be that much. So, but the government order, you have to. So those are the two ways, 50% reduction and a government order.
Let me ask you a question. So in the first scenario with the 50% loss in Q2, I qualify for Q2 expenses and Q3, which I want to come back to. But in the government, if I don't have 50% loss, maybe I have 23% loss. Okay, I have a client like this. And they don't qualify for Triple P 2.0, so they're trying to figure out, can I qualify for the ERTC? And, well, we had a government mandate to shut down. Okay. Are you saying that the qualifying payroll would only be in effect during the time of which the shutdown was mandated? And once they release that, then it doesn't qualify anymore?
Yeah, that's spot on. That's absolutely correct. Yes.
Wow. So I might as well not qualify because I wasn't paying anybody then.
That's what we're thinking with some people. However, here's the doctor who might qualify. When they brought PPP 1 out in March, I probably did 30, 35 webinars to dentists all across the country on this. And what the government wanted you to do is the government wanted you to pay your employees for 8 weeks. Remember, it was 8 weeks when they started?
Yeah.
Regardless of whether your business was open or not. And if you didn't pay them for 8 weeks, you didn't get the loan forgiven.
Yeah.
So I was harping on that. And I was saying right, wrong, or otherwise. And my dentist was saying,
pay them.
Art, why would I pay? I need this money. This is my lifeline. But why would I pay them? They're going to be mad at me because they're making more money on unemployment. And it doesn't do my business any good. I said, I don't make the rules. Don't shoot the messenger. Okay. Yeah. Right. So if you have that doctor who from the beginning listened to what I was saying and the other people that were talking, they may qualify, but it's not going to be as big of a number as for 2 quarters at 50%.
Sure. And so here's the next part is it sounds like double dipping. If I was paying employees with Triple P money, let's say I qualify for the 50%, Q2, Q3, and I start paying my employees in that Q2 with Triple P money, it looks like payroll. Does that money that I paid them with Triple P dollars qualify me to get this ERTC?
Okay. So has it been complicated so far, Eric?
Oh my gosh, I'm still trying to figure it out, and I'm listening to stuff every day.
Now we're getting to the complicated. And this is where we at iBailey have created these intricate spreadsheets of how to figure this all out. I mean, we've got spreadsheets that are created by people that are much smarter than I am, and that does this. So you cannot use the same wages for PPP forgiveness in 2020 as you use to claim the ERTC. So let's think about this. Remember the example, Eric, that I gave you? Dentist gets his ERTC money, his PPP money
May 7th.
on May 7th.
Yeah.
So his period covered, so we have the covered period May 7th to October 22nd. Comparing that to the 2 months of April 1 through September 30th, right? So they're kind of interlocked, but they're not exactly the same. So the way we do this is the 103 pages of guidance that came out on March 1st said, basically, to make it simple, you can't, once you make an election to use money for PPP, you cannot use it for ERTC. So if you are going to claim the ERTC, this might be the most important thing I say on this podcast. Do not file for forgiveness yet. The regulations say that because you might put all of your wages on there and don't put anything else, and you are going to reduce the amount that is eligible. So the game is you only need 60% of the amount of the loan that you took PPP to qualify for forgiveness. So let's say I had a $100,000 loan, Eric.
Yep.
I need $60,000 to put on my forgiveness application. And I need $40,000 in the other expenses, which is rent, utilities. They have added PPE, dental supplies, computers. They added a whole new set of categories.
For Triple P 1.0.
Yeah, 1.0 and 2.0.
Okay,
right?
Good to know.
So my example would be $60,000. So what I want to do is I want to bifurcate the wages during these 2 periods so that I carve out $60,000. I carve out $60,000 of wages to put on my application, make sure I have $40,000 in the other categories so I get my whole $100,000 of forgiveness. And then I take the rest of the wages paid and I try and get them, as much of the wages to be out of quarter 2 as I can.
Gotcha.
Because in my example, remember, Eric, my period my period for PPP ended October 22nd.
Yeah.
So I've got 22 days after the end of the 3rd quarter. I'm going to use those wages specifically for PPP,
Triple P wages,
because they don't qualify for ERTC.
Yeah.
Go on the front end. So April 1 until September 30th is my ERTC. Well, most doctors didn't get their PPP loans until, let's say, May 15th. So I have the whole month of April and the first half of May. I'm going to use those wages specifically for ERTC because my covered period doesn't start until May 15th. This is the game we want to play. So we want to make sure that we get 60% of the wages on the application, get enough to have 100% forgiveness, and to do the best we can to use the rest of the wages as much as we can in quarter 2 and quarter 3 to get to that $10,000 number.
Mm-hmm.
Okay.
Per employee. Yeah.
Yeah. So I can get both. It is complicated. It's So that's the game.
And then let me ask you this: how do I tell Triple P forgiveness people that my payroll I spent that money on was the last part of my funding? It was October. I'm trying to figure out 24 weeks. That seems like a long time, but can I say I used Triple P funding from August to October? I mean,
Absolutely.
how do you do that? Is that on the application?
Any way you want.
Okay.
And the payroll services, the major payroll services, I'll mention them by name: ADP, Paychecks, Ovation Heartland, and there are others. They know this is coming. I mean, ADP, and I'm not promoting any payroll services.
Yeah.
ADP processes 1 out of every 4 paychecks in the United States of America. Mm-hmm. So they know this is coming. They've got reports. We actually are getting these reports and are able to export them onto an Excel spreadsheet, which then goes into our master spreadsheet, and it's by pay period. So we're going to have a spreadsheet that shows by pay period how much each employee made, and then we're going to bifurcate PPP, ERTC. So we may end up in a situation, maybe a doctor's rent was very low. Maybe they didn't have a lot of other expenses. We may have to borrow some money. We might have to borrow some money from the, to get the forgiveness, because we don't want to lose the forgiveness. We don't want to pay this loan back.
Mm-mm.
So it's a math. I always
Yeah.
say, Eric, my life is a math problem. This is a big math problem, and it is a huge opportunity.
Yeah.
I mean, if you have a doctor who has 30 employees, maybe they've got a $3-4 million practice. I'm going to guess, because of the great coaching work that you guys do in your coaching business, I'm assuming your practices are thriving and successful, and you have many multi-million. I mean, if you have a $5 million practice with 30 employees, that's $150,000 credit, and they probably got a PPP loan of $200, $300, $100,000. I mean, that's huge.
Yeah. Now, every time you say bifurcate, I know all the dentists are thinking about furcation. So what does bifurcate mean, really?
Split. Let's just say split.
Splitting it
In other
up.
words, we're going to split up. We're going to carve out the wages that we want to use for PPP
Yeah.
during the covered period, and we're going to carve out the wages that we want to use for ERTC. And the way you get this, by the way, the way you actually apply for this for 2020 is you file an amended payroll tax form 941. It's a form 941X. The payroll services will charge you to do that. Not very much from what I'm hearing. And you'll file an amended second or third quarter payroll return.
So file an amended payroll tax return for 2020, 3 and 4 quarter.
2 and 3. Usually
2 and 3.
Probably second
Yep.
and third, possibly fourth.
Yeah, I got it. That makes sense. Yeah. Okay. Gotcha.
Yeah. Now, the way this works mechanically, Eric, is that the first, let's say I get a $50,000 ERTC. I go back and figure in the second and third quarter how much federal employer payroll tax I'm paying, how much Social Security tax. Because remember, when you pay your employees' wages, you're paying 6.2% of their wages as the employer in Social Security, and 1.45% as the employer for Medicare. Your employees are having that same amount of their salary. So you're going to get back that 7.65% combined amount, which is not going to be a huge number. So maybe it's $10,000 for those quarters. The rest of it, they just send you a check to.
Wow, you're actually getting cash back in your pocket.
Uh-huh.
It's a return.
Uh-huh.
Nice. And we're not taxed on it, right? That'll be the next question.
No,
Okay.
but again, we have to reduce the deduction that we're taking.
So there is kind of a tax on it then, because I lose that reduction.
Right, but you're getting, most of our doctors are going to get about 3 when you net the whole thing out, it's about 3/4.
Okay, so it's still profitable to do that.
I do want to say one thing.
Yeah.
There are companies out there that are charging a very large fixed percentage of the tax savings. I would strongly urge people to go to their CPAs to do this work, and don't let the payroll services do this. We've had stories of payroll services do what payroll services do, and they do it very, very well.
Yeah.
But we've heard stories of them just saying, "Oh, well, just give it to us." One of my colleagues, I didn't mention, I'm a founding member of the Academy of Dental CPAs. We have firms all over the country that are my brethren, if you will. One of them was telling me the other day that he got a story from a client, said, "Oh, my payroll service said I can get $70,000 in an ERTC," and my CPA friend said, "Send me the information." The real ERTC was $350,000 because they just didn't know what they were doing.
Wow.
So go to a CPA who works with this, who deals with dentists. That's what we do. We're gearing up. We're going to be doing hundreds of these. I mean, we're gonna blow the federal deficit right out of the sky.
Wow.
So, yeah, it's so be very careful. There are people that are taking advantage, and there are actually companies that are making cold calls to dental offices soliciting, "Well, did you hear about this? We can get you back tens of thousands of dollars, and you pay us a third or 30% or whatever." And the CPA firms are charging significantly less than that.
Wow. All right. So here's my frustration now, Art. We haven't even talked.
Probably.
Yeah, we haven't even talked about ERTC for 2021.
No.
And that's a whole nother set of rules. So I guess that'll be a whole nother podcast, I guess. We have time for that? I mean,
I can make it really quick.
Okay, go for it.
All right, for 2021, instead of a 50% reduction, you only need a 20% reduction.
20% reduction in 2021 in a quarter compared.
Yeah,
No.
first quarter 2021, first quarter of 2019. You can also use the immediately preceding quarter, fourth quarter 2020 versus fourth quarter of 2019. And the credit, instead of being $5,000 a year, it's 70% of the qualifying wages per quarter. So my same doctor that had 10 employees that got 50 grand for 2020, if they qualified for the first quarter of 2021, they would get 70,000 for that quarter. But then you have to play the same game with the PPP2 loan that they got in 2021. It never ends. So,
I gotcha.
and Congress, just with the new bill that President Biden signed last week, the $1.9 trillion stimulus, they expanded it to the third quarter and the fourth quarter. Most doctors are not probably going to qualify because dentistry is doing pretty well in the first and second quarter, but some practices may.
Yeah. Wow. My head is spinning right now. Where can we find more information that's easy to digest, maybe not a 103-page document?
You can go to our website, www.eidbailey.com. My podcast, I don't know when this is going to come out. My podcast is going to be out on March 17th, and I am talking about this. It's the longest podcast I've ever recorded because there's so much information.
Yeah.
So we have that. And again, if they want to get a hold of me, I can give out my information too, if you like. But we are gearing up for this, and I've answered questions from dentists all over the country. But eidbailey.com, in our insight section, we've got articles about this, and also on our YouTube channel is a webinar that I did last week on all of this with a 50-slide PowerPoint. So they might want to go to the Eid Bailey YouTube channel and just look at look for that.
Awesome. Would you say that someone who's considering ERTC for 2021 has time to worry about that? Like, we don't need to be so pressured on that one. Let's figure out 2020 first.
Absolutely. Yeah,
okay.
Absolutely. They haven't even, the notice 2021-20 specifically was only designed to talk about 2020. Congress said that Treasury said they will issue another ruling, another notice on how to deal with 2021. But yeah,
later on.
Here's the other thing. You've got 3 years from the due date of your payroll return to amend. So you have plenty of time. What you don't have time to do is file for the forgiveness.
Perfect. All right, you've made it really clear.
Yeah.
Awesome. Yeah, forgiveness we got to apply for by that end of that 10 months.
Right, and we have to figure out the splitting of the wages, so we got to get that done. We can do that and file a little later for the amended returns, but we want to get the forgiveness filed before the 10-month period is up.
Yeah. Nothing like cramming for a test, right? That feels like where we're at. So
I will please respectfully ask your listeners to be kind to your CPAs. We're dealing with all of this. We didn't even talk about the HHS Provider Relief Fund reporting. We're not going to talk about that today. It's all hitting at the same time. It's a whole new service line that we CPAs had to learn, and we're not staffed or geared up for it. And we're doing a good job. Well,
I can tell you that the coaches on this side are fielding a lot of these questions and saying very similar things about, be patient with your CPA and those sorts of things, but also helping to understand is, what does this really mean? If you're going to go through all this, what's the dollar amount? And so I think you've helped us be able to sit down, do some math and say, all right, my payroll is X, my PPP money was Y, I spent it here. What does that give me? What did I actually spend of my money in quarter 2 and quarter 3? And I get half of that. So if that's $2,000 for you, you may say, well, it's not worth it for me to go for that.
Exactly. And I've talked 2 or 3 clients out of it.
Yeah, it might be too much work and too much attention on you and all that kind of stuff. So sit down, do your math, do your forcations, bifurcate your money, split it out the way you want, like we talked about. Work with your coach on this. Obviously, us coaches can help you out and at least do some math and say, hey, it'd be worth talking to your CPA about it. And hopefully that will diminish as many calls as you get, because we'll hopefully filter out those who it just doesn't make sense to do. So,
right.
All right. And obviously, All Star can actually help you guys. If you're interested in any more questions that you guys have, send an email to Heather. It's heather@allstardentalacademy.com. We're happy to help you with anything when it comes to practice management. We're there for you, and we'll get you taken care of. So, Art, thank you so much for joining us today. I really appreciate it.
Eric, thank you.
Full of information. And so for those listening, thank you for joining us and taking the time to invest in yourself and in your practice. It's going to pay off. Please share this podcast with your friends. If you thought this was good information, and I know you did, share this. Subscribe to the channel, of course, get them to subscribe. That way we're just sharing great information and helping everyone in our industry out. That's really what we want to do. And so until next time, go out there and be an all-star.